Hey, hello investors and future investors. Welcome back to the channel. In today's video, I'm going to give you 7 tips that help me become a better trader, investor. My name is Tim. Welcome to Investment Gains. Let's jump right into it. Now, the main reason I'm doing this video is because as retail investors, we do not have the luxury of being wrong. And that's because the market can fluctuate a lot more often than we have money to keep using. That being said, here is the number one rule that made me a better trader: mindset. Now, you need to create a mindset in which you are going to lose in the stock market. Once you're a trader or investor, the stock market never goes up consistently. It goes up, it goes down. So whether you're a trader or investor, you will see those fluctuations. As a trader trading for daily income, it gets a lot worse because you will lose money. Now, I will be showing actual live examples for each of these points here. So for today's videos, all the points we're going to be using the Spider ETF, ticker SPY. So let's go ahead and go right into SPY. We're going to go to trade SPY options. Okay, now here we are on the Spider ETF. Now guys, before I continue, if you like and you can resonate with this content, go ahead and like the video and subscribe for more videos with similar content. Now, in order for you to have a mindset of one of prosperity, you have to let your losses go. You will lose money. Let's say, for example, you're going to do a call credit spread. Let's go ahead and do a quick call credit spread. So let's be sure it says sell and call. And then now we're going to go ahead and choose our strike date. We're going to go with July 9th. Now, this is just an example, so no need to copy these trades. Now, I'm going to start off with my sell call. Now, if you guys are frequent to the channel, you guys know I like a chance of profitability of 80% or higher. But just for this example, let's say I decide to do a call credit spread at the money, which means right around the share price, and I go with the $55 strike price. Now I'm going to go ahead and buy a put right above it at a $56 strike price. And once again, you guys know every single strategy I do on this channel involves me getting a premium up front. I am an income trader, means every strategy I use must pay me income at the start of the trade. So if I were to do this call credit spread, as you can see here, I would be paid an amount of 41 cents or $41. However, if the market does decide to go against me, and the share price goes above the 556 level, then I will lose all this money that I put as collateral. And here's your collateral. Let's go to review. And there you have it. In order for me to do this contract, it's going to cost me $100 as collateral. Now, once the share price does go above $556, I will lose my entire collateral. However, you need to maintain a mindset of loss, which is going to better enable you to continue with your next trade. Do not take a losing trade into your next trade. Now, it is not all loss. Let me show you why. So, the amount of money you're going to lose is the difference between your $100 here and your $43 here. The difference is all you lost. And the reason for that is that when you put on the trade, you already received a credit of $42.94. Point number 2 is an exit strategy. Before you enter any trade, you must know how to get out of the trade, what your profit level is going to be, or if you're going to leave until expiration. Now, I personally, I never like to leave any of my trades until expiration because there's no telling what's going to happen. I like to have full control, so I always close out at 85 or 95%. Depends on what strategy I'm doing. If I am doing the Iron Condor, I like to take profits a bit sooner, which is at the 75% mark and upwards. Now, an exit strategy for this call credit spread would be doing the exact opposite of what you did to get in. So let me show you the exit strategy. So once this trade comes down to, let's say, 80% win, I'm going to go ahead, I'm going to close it out. So now I'm going to go to buy, and now I'm going to buy my previously sell call. And then now I'm going to go ahead over to sell, and then I'm going to sell back my previous buy call. And there you have it. Now, I am a New Yorker, so the way how I practice my exit strategy, on my way to and from work, when I used to have a regular 9 to 5, I used to have my cell phone in my hand, and I used to practice getting into every single trade and practice getting out of every single trade. Now, with a 45-minute commute from Brooklyn to New York City, I was able to do this multiple times, and that's how I got very good at it. Choose what works for you, and I suggest you practice it. Remember, stay to the end of this video. I'm going to show you the most important rule in order for you to continue becoming a good trader and and for you to continue being very profitable in the stock market as an investor or a trader. So point number 3 is always try to use an app or a brokerage that use minimal fees. Trust me, the fees will add up. Now, here's just an insight of some of the fees which some of these brokerages are charging. And my favorite app to use is going to be the Robinhood app. And the reason for that, the fees are very minimal. Now, if you go to Momo pricing, it's going to not only show you their pricing, it's going to show you competitors as well. Now, the reason why I like this is that Momo is very transparent. Now, let's get back into our Robinhood. But before we do that, here is the price per contract for one option contract. So what we're going to do now, we're going to take the minimum cost per contract and we're going to use it as an example so I can show you guys how this adds up. So let's go back into SPY options, and now we're going to do what's called an iron condor. Once again, guys, this is not a real trade, so please don't copy this. So now I'm going to go ahead to sell call once again. I'm going to go right above. I'm going to go to a buy call. Then I'm going to switch over to sell and put. I'm going to go ahead below my share price, and I'm going to choose my sell put. I'm going to go right at the money. And once again, at the money means your nearest price to the share price, whether it's above or below. So I'm going to get the at the money sell put. And then now I'm going to go for a buy put. I'm going to go right below my sell put. There you go. Now, as most of you guys know from my previous videos, this is called an iron condor. Now, with the iron condor, there's actually 4 different legs. Now, the point of doing this iron condor is to show you how your option contract fees really adds up. So for each contract, it would be 50 cents. So just for putting on this iron condor, it's going to cost me initially $2. Now, point 2 was exit strategies. Now, once my iron condor becomes profitable and I need to close it out, I'm going to have to do the exact same thing I did to get out of it. So once again, that's another 4 legs to close off this iron condor. So that's an additional $2. So now it's $4. So pay very close attention to fees. Now, me personally, I do iron condors every single day, which is about 4 to 5 minimum iron condors I do within a week. So do the math and see how that would stack up if I didn't have free options trading. Now, if you want to get started with Robinhood, I will leave a link in the description below. Now, point number 4 would be to join a group of like-minded people in order to discuss, strategize, and make better decisions based on your risk tolerance. Now, guys, when you guys join these groups, no one is wrong. Everyone have a different point of view. Here's my advice. Find a strategy that works for you and keeps you profitable and keep using that strategy. Here's an example. Every single trade I do, I receive option premium at the start. However, on the opposite end, there are some people that actually buy options. Now, they win with these buy options. Unfortunately, that does not work for me. So choose what works for you based on your risk tolerance and go from there. Now, point number 5 is going to be to continuously keep funding your account. Now, I do have a couple of videos where I showed I took my account from $500 all the way to $10,000 in a couple of months. Now that I'm a more experienced trader, I know I could have done it way sooner, way faster if I go to continuously keep funding my account. Now, my growth from $300 to $10,000 was only option premium, which I kept reinvesting until I get to that point, and that is why it took me so long to get there. Now, imagine if I were to contribute $250 every single week in addition to my initial $500. Imagine how much quicker I would get to my goal. So, I know there's lots of YouTube channels out there that show you they could grow account from this point in time to that point in time. But trust me, it works out way easier if you just keep funding your account. Your growth is going to be a lot better. Also, your premium you receive is going to be a lot higher, and your growth on your entire portfolio is going to be more exponential. Now, point number 5 would always be to check for earnings before getting into any option contract. Now, we all pay attention to the earnings of the big 7 companies. However, we also need to pay attention to the small companies if we're treating those companies. For instance, one of my favorite stock is going to be Mara, ticker MARA. And you guys know I trade this stock a lot. But one time I did miss out on earnings and I end up with a major loss. So my advice to you, doesn't matter what stock you're trading, it literally takes less than 5 seconds to go on and check if the stock has earnings anytime soon. Now, point number 6 is going to be to stick to your strategy that works for you. Now, I did mention this a couple of times. The strategies that work for me are income generating strategies. Now, we're going to go over a couple of them to show you how I do this consistently. And that's why I favor these strategies more than anything. So now we're going to go ahead to trade. We're going to go to trade options. Now, I'm going to show you a very simple strategy that I do, which is called the cash secured put. We're going to go to sell and put. This is one of the simplest strategy out there. And if you're a beginner, I suggest you start off with this strategy. Now, all you need to do, you go to sell put, you choose your expiration date. We're going to use July 12th for this example. And now we're going to go ahead and we're going to choose our strike price below the current share price. Now, when it comes to this part, remember, you choose what works for you. My personal experience, I always find that a chance of profitability of 80% or higher works for me. So if I were to do this strategy, I would go with the 551 strike price, which gives me an 88% chance of profit. And once again, I will get that premium. Now, the premium in this case is going to be 20 cents multiplied by 100 shares, which is going to give me $20. Now, for those of you that stayed till the end, this is the most important one, number 7. Number 7 is practice, practice, practice. It does not matter how many YouTube videos you look at, how many books you read. The only way for you to dominate and be a better options trader is to practice. You have to get down and dirty with options. And going back to point number 1, you're going to need to have a good mindset, because when you get down and dirty with options, you will lose money. Your mindset is going to propel you to go forward. Okay, so for those of you guys that stuck around to the end, here's a bonus strategy that I personally use in order for me to grow my account. Now, my personal bonus strategy is for you to always make sure you accumulate enough premium to cover your collateral before you scale your account. What I mean by this, if you were to put on a trade and your premium is $20, make sure you do this trade 5 times in order to generate $100, which is going to match up to your collateral. So now your collateral is $100 and you've made an additional $100. Now you could scale up to 2 contracts, because now you start playing with your money and house money. So investors and future investors, like and subscribe to the channel to not miss out on any of our latest videos. And before you go, please check out any of these 2 videos to help you become a better trader. And always remember, keep pushing your investments.